Price is what you pay, value is what you get. Although I don't believe the market is efficient, but I have to admit the market is getting more efficient than before. So we're to looking for the inefficient part of the market. Here comes this video. So here we see the profit share of Bombardier Inc. So Bombardier is a plane manufacturer in Canada. So you see, this is a Series 2 preferred share, and there is totally 3 series of preferred share. This Series 2, the second one is Series 3, and the other one is Series 4. And the Series 2 is the most senior preferred share, which means in case Bombardier go belly up, so after paying all the creditor for all the debt, and then the rest of the asset will pay for the preferred share. And the Series 2 shareholder will be in the front of Series 3 and Series 4. So Series 2 shareholder will get paid first. So which means it is the most senior preferred share. So here you see Series 2 preferred share is most safe, is safer than the other two series. And you see the price here is $16.65. And annual dividend yield, and you can see annual dividend yield is 8.9%. And I'm pretty sure at the end of this month, this dividend will go up again. The interest rate was just increased, and it will increase again in December. So Series 2 preferred share is basing the dividend yield on the current prime rate. So as long as the interest rate goes up, its dividend will go up. So it's a float rate. And the second one I'll show you over here is Series 3. So this one is Series 3. So as you can see, Series 3 is senior than as it is junior than the Series 2, and the price of this one is much higher than the Series 2. So it's $22.73, and you see the dividend yield. So the dividend yield is only 4.3%, which is less than half of the Series 2. Of course, this Series 3 dividend, Series 3 is basing dividend on top of 5-year rate reset. So recently, in this year, in the August, they reset the rate. So now the rate is every quarter they pay 28 cents, 28.7 cents every quarter. So a little bit over $1 a year. So the yield is 4.381%. So this is the second series. This is Series 3 preferred share, and Series 2 and Series 3 can be exchanged every 5 years. So which means in 5 years, Series 3 can be exchanged to Series 2 for one share for 1-for-1 base. And of course, Series 2 can change to this high-priced Series 3 preferred share in 5 years. So it's just being exchanged this year in August. It's been done already. We can see quite a lot of people exchanged their Series 2 into this Series 3 shares, which is looks like it's quite a smart movement. As you can see, this Series 3 Series 3 preferred share, the price is much higher than the Series 2. And of course, there is one more series of preferred share of Bombardier, that is Series 4. It is. So Series 4 is a fixed rate preferred share. It's most junior among those three series of shares. So the dividend yield is 6.25. No, it's 6.25 is based on $25 a share. So current share price is 17.4 dollars. So the yield is 8.98%. So which is close to the senior one, the Series 2 professional. Okay. Okay, so where is the inefficient part of the market? So as you can see, this Series C, the most junior one, is having fixed rate, and it's being most junior. So of course, the safest one is the Series 2. Then this among these three series of dividends, as three series of preferred share. And the the inefficient part of this is here. So you see, this one, the Series B, the B share, which is Series 2, have the highest dividend yield and they keep going higher. And then it is the safest, safest one among these three series of preferred shares. And and why this price is so low? Like it's almost $6 cheaper than the series 3 preferred share. Like this one is $22.73. So it's like over $6 more cheaper than this preferred share. And why it is like this, right? It's have higher dividend than this one, and a safer investment than this one. So why this one this Series 3 is so expensive, and the Series 2 is so cheap? So why it is like that? So the reason why it is because this Series 3 preferred share, we have a big buyer behind it. So the buyer is keep buying this Series 3 share every month for quite a long time already. And the market share being buy up by this big buyer from Goldman for a while. And it used to be happening on Series 2, like the most senior professional also, but that stopped since August this year, after exchange between Series 2 and Series 3. But this Series 3 is the buying activity still going on. So the share price is much higher than Series 2. So I believe there is a significant opportunity exists over here in the Series 2 preferred share. As you know, the interest rate is keep going higher and will stay higher for a while, which means the dividend yield on Series 2, the B share will stay higher, and keep higher for a while. And in 5 years, so from August this year, in 5 years time, this B and D, which means Series 2 and 3, can be exchanged one more time. At that time, you can exchange, which means the price at that time should be on par. So you see the difference of the price and the difference of the dividend yield, and the inefficient part of the market, right? So this is the video I was first made trying to explain where the inefficient part of the market. So I think I will make many more similar video in the future. about the different companies. I found it can be quite meaningful things to do. If you like this video, please give it a thumb up. If you find it useful, please subscribe my channel or share it with your friends. Thank you for watching.